Iran and Israel tensions have pushed Brent crude to about $108 per barrel, sparking global market concerns, though India's fuel prices remain unchanged as of now. Government sources say India has 25 days of crude and refined reserves and does not plan to raise petrol or diesel prices as of now. But as geopolitical tensions in West Asia continue to disrupt global oil markets, External Affairs Minister S. Jaishankar, while addressing the parliament, said the government remains committed to safeguarding India's energy security while ensuring that national interests remain the top priority. Meanwhile, reacting to the surge, US President Donald Trump has said that the current rise in oil prices is a small cost for global safety and peace, suggesting that prices will fall once the Iran nuclear threat is eliminated, or once their action kind of comes to a halt. While Trump is downplaying the spike, global markets remain volatile. Supply disruptors through the Strait of Hormuz continue to heighten uncertainty.
Give us a sense of what we're looking at if this were to continue, the kind of sustained pressure that we're seeing on the airlines at the moment. What do you reckon is going to be the larger impact of this?
Well, that's right, especially when you're talking about crude oil prices. Remember, India is a net importer as far as crude oil prices is concerned. Not just crude oil, we also import a significant amount of natural gas as well. So any sector, any company, that depends on crude oil, on petrol, as an importer, will face significant margin pressures, which is what you're seeing pan out, especially in the aviation space. Remember, there are two listed entities in the aviation space in India, both Interglobe Aviation, that goes by the name of Indigo, and SpiceJet. Both of these companies, both of these stocks are facing significant margin pressure. They are seeing flight cancellations as well, so it's a double whammy. Flight cancellations plus rising input costs, both of them will lead to significant margin pressure. Now, talking about the markets on an overall basis, remember, coming into trade today, we did expect there to be significant damage. Why are we saying that? Because overnight, especially on Friday, you did see most of the US markets, most of the European markets end with deep cuts. Along with that, oil prices, something that we track, have now topped close to the $120 a barrel mark. Now, this spells negative news across most of Asian equities. And today morning, you did see Kospi, which is the South Asian, the Korean market, down almost 7.5%. So we expected markets to be quite weak, and which is what has happened, almost 2.8 to 3% lower. That's right.
Absolutely. As you mentioned, this is very much on expected lines also. But that being said, when we talk about the market jitters, how do you read that going forward?
Well, a lot of things that one needs to keep an eye out for. One of the impacts that we've just discussed is the impact of crude oil prices. Let's just spell out what it means for Indian equities when crude oil prices go up. What are the big worries for India when crude oil prices, go much above the $100 a barrel mark? Number one, the current account deficit spikes up. Remember, the Indian rupee already is a significantly underperforming currency, especially when you compare it to Asian markets. The Indian rupee today at a fresh record low against the dollar, and against a rising import bill, the Indian rupee, the value goes lower. And along with that, remember, when you're looking at FMCG companies, biscuit companies, paint companies, aviation companies, most of the companies, even if you look at a name like an MGL or an IGL, where you go to fill up your gas or petrol, even OMCs like HPCL, BPCL, where you go and fill up, your car's tank, most of these companies actually use either crude oil or a derivative of crude oil as their input. And these companies, all of them, will face significant margin pressure. So at one point of time, you will see inflation come up, if this particular situation escalates. The government, however, has gone ahead and made a lot of comforting remarks. They've said that we have significant reserves of oil as well as natural gas, so they don't expect prices at the pump or the retail prices that you and me would pay for our cars.
Let's also go across to my colleague Pallavi joining us. Pallavi, 25 days of reserves, on the face of it, doesn't really sound like a lot, even though it's better than many countries. The only solace for India seems to be the fact that 60% of their oil supplies come from the non-Strait of Hormuz route. What is the status of these supplies?
So, Shivani, there are 2-3 things very quickly to be putting across. Yes, you are right. There are 25 days of supply as far as crude oil is concerned, plus an additional 25 days as far as the energy products are concerned, which includes petrol as well as diesel. But all of this is also important in terms of the LPG supplies or the LNG supplies that we have for at least 25 to 30 days, and they are some which are being replenished, which are coming through a different route. Now, the thing over here is, as far as the crude oil or energy products are concerned, it's not just those 50 days that we are talking about. We are also talking about alternative
cue me
routes
to
and
the right.
alternative sourcing also which are taking place. For example, only 40% of it comes from the Strait of Hormuz, but the rest of the 60% comes in from, say, the Cape of Good Hope. Our supplies are also coming in from America, West Africa, Cuba, and now, of course, from Venezuela. We've also been purchasing Russian oil, little dip in that, but it's not been stopped. So that's the reason why the government is repeatedly making the point, please don't panic, please don't hoard, you have nothing to worry about. Of course, the rider is that if this war continues for a very, very long time, then it is going to have a long-term impact, and that impact will obviously be on inflation.